Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hanking Gold International Limited latest report. Hanking Gold International Limited is a diversified conglomerate with a wide range of business interests. At the core of its operations are the exploration, mining, processing, smelting, and sale of mineral resources. The company has a significant presence in the People's Republic of China, Australia, and Japan, where it operates several iron ore mines, including ANU Mine, Maogong Mine, Shangma Mine, MT Bundy Gold Project, and Signet Gold Project. In addition to its mining operations, Hanking Gold International Limited also engages in various other businesses. These include the sale of agricultural and forestry products, which suggests a strong connection with rural areas and local communities. The company is also involved in the manufacture and sale of green building materials, indicating a commitment to sustainable development and environmental responsibility. Furthermore, Hanking Gold International Limited offers a range of services beyond its core business activities. These include leasing services, travel and accommodation services, and technical development and technical consultation services. This diversification into related fields allows the company to leverage its expertise and resources in new areas, while also providing additional revenue streams. Overall, Hanking Gold International Limited is a complex and multifaceted organization with a broad range of business interests and activities. Its diverse portfolio reflects its commitment to growth, innovation, and sustainability, as well as its desire to make a positive impact on the communities it serves. Hanking Gold International Limited market capitalization of $9 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Hanking Gold International Limited holds a significant advantage in their industry. Hanking Gold International Limited trades at a higher price-to-earnings ratio of 38 times and a higher price-to-book ratio of 3.64 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 60% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The net income of a company underwent significant fluctuations between 2024 and 2025. Initially, it decreased by 14.89% in 2024. However, this trend was reversed in 2025 when the net income increased by a substantial 201.86%. This increase can be attributed to an additional RMB 16,827,000, 2.5%, added to the previous year's figure. The profit margins also experienced changes during this period. In 2024, the gross profit margin decreased from 62.8% to 59.94%, a decline of 2.86 percentage points. Conversely, in 2025, there was an increase of 5.33 percentage points in the gross profit margin, rising from 2.75% to 8.08%. The conflicting information across different pages suggests that the actual reasons for these changes are unclear and require further investigation. The company's financial performance indicates a strong ability to generate cash from its core operations. As evident from the net cash flows from operating activities, the company has consistently produced positive results in both 2025 and 2024. In 2025, the company generated RMB 112,522,000 in operating cash flow, while in 2024 it was RMB 178,669,000. This trend suggests that the company is efficiently managing its resources and generating sufficient cash to support its operations. The positive operating cash flow is a key indicator of a company's financial health, and in this case, it indicates that the company is well positioned to meet its financial obligations and invest in future growth opportunities. The company's debt level has undergone significant changes over the past period. Initially, total borrowings increased by 7.58% compared to the previous year. However, this trend was short-lived, as borrowings decreased by a staggering 98.9% in one instance. Conversely, non-current liabilities saw an increase of $93,449 due to higher borrowings. The overall picture is mixed, with total borrowings increasing from RM 895,857 to RM 111,806. In terms of interest expenses, the company experienced a rise due to increased borrowing levels. This suggests that the company's debt level has had a direct impact on its financial obligations. Despite fluctuations in debt levels, the increase in interest expenses indicates a significant change in the company's financial situation. The company's performance can be analyzed through its various segments and regions. On a positive note, the domestic business segments, specifically iron ore concentrate and high-purity iron, showed a revenue increase of 3.16% year-on-year. This indicates a strong performance in these areas. However, not all segments fared well. The Hong Kong Stock Exchange segment, which was involved in gold business, experienced difficulties. The original spin-off listing plan had to be terminated due to strategic implementation adjustments. This setback highlights the challenges faced by this particular segment. Management's primary focus is currently centered around the gold industry in Australia. A key area of emphasis is the company's significant investment in the Signet Gold Project. This strategic initiative underscores the organization's commitment to growth and expansion within this specific market segment. By concentrating on the Australian gold sector, management aims to capitalize on emerging opportunities and drive long-term success for the company. The company has a history of paying dividends to its shareholders. In 2024, the company declared two separate dividend payments. Firstly, it paid out RMB 35,131,000 as part of its regular dividend payment for that year. Additionally, an interim dividend was also paid in 2024, amounting to RMB 35,220,000. Unfortunately, there is no information available regarding share buybacks by the company. Despite reviewing both page 46 and page 50 of the provided summary, no mention is made of any share repurchase activities. Therefore, it can be concluded that while the company has paid dividends in the past, there is currently no evidence to suggest that it has engaged in share buyback programs. That concludes the financial summary for Hanking Gold International Limited. Feel free to comment below, and I will be happy to answer them when possible.